Buffett says to be a great investor, you must remember this: be fearful when others are greedy, and greedy when others are fearful. These few words are the crown jewel of Buffett's investment philosophy. He revealed the true nature of market cycles and the role human nature plays within them. This idea is worth more than any complex indicator or arcane economic model. Its core wisdom lies in profound contrarian thinking. The financial market isn't always a rational, efficient machine. It is more like a manic depressive, with motions swinging wildly between euphoria. When the economy booms, good news is everywhere, and asset prices soar. The market is driven by greed. People rush in fearing they'll miss out, even buying assets at exorbitant prices. At this point, price hikes have already borrowed from future growth, and risk quietly builds. This is when true investors should flee, because the party will end, and the bubble will burst. This fear isn't cowardice, but a clear-headedness based on value. It reminds us to avoid the frenzy, hold cash, and wait patiently. Conversely, when the economy is in trouble, bad news piles up, and fear grips the market. Investors panic sell, driving the stock prices of great companies far below their intrinsic value. The market is pessimistic. As if the world is ending, this is when the true investors should become greedy. This greed isn't a blind impulse, but courage based on value. It means you see opportunities others don't. Great companies with solid fundamentals, temporarily mispriced, are now on sale. Buying boldly now is the true low-risk, high-return move. Following this maxim requires immense courage and independent judgment. It demands you break from the crowd, resisting the immense pressure to conform. Selling at the peak of a bull market, you'll seem conservative and premature. Buying in the depths of a bear market, you'll seem foolish and reckless. This must be backed by a solid value assessment framework. It lets you know clearly what is cheap and what is expensive. Ultimately, investment success isn't about following the crowd, but exploiting its irrationality. When others' greed pushes asset prices to absurd levels, you should fearfully exit. When others' fear pushes asset prices to the bottom, This ability to turn market sentiment from a threat into an opportunity is what separates average investors from masters. He elevates investing from speculation on fluctuations to the art of capital allocation based on intrinsic value. Buffett often stressed, it is far better to buy a wonderful company, a wonderful. This marks Buffett's evolution from his early cigar butt strategy to a mature value investing system. He revealed a core principle: the ultimate return on investment depends on the quality of the business itself, not just the purchase price. A wonderful company is one with a strong economic moat. They possess as brand advantages, pricing power, network effects, or cost to leadership. They can consistently generate ample free cash flow and reinvest it